Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 11th of October, 2021. And shucks, there was no Chicago White Sox game. Now, I admit, I'm primarily a Cubs fan. Been a North Sider in Chicago most of my life. But if a Chicago team gets in it, I don't care what the team is. I suddenly am one of their fans. Why wouldn't you be? And I had the best time. I've never been to a playoff game. I was not ready for the energy a playoff game in baseball brings with it. It's like nothing I've ever experienced. We had one of the owners' boxes, and we're talking inside, one of the big suites, so we didn't have to worry about weather, and it was gorgeous in the 70s last night, high 70s. And it was just, what experience. Every swing, the crowd goes crazy. Quite an ordeal. I would tell everybody, if you ever get the experience, it's something to see. Okay. Now, something to see will be later tonight. We're changing our landing page on our website. I've told you that this is coming to help you. When you get things from me, just go to our website. It'll take you right there. You don't have to go to YouTube per se anymore. We'll have it right on our website playing for you. And that way, when you hear my offers, you're right there for whatever you want to get or new reports. That's what we're doing. So we've been working on this for a while. There is no webinar this week. There will be one next week. And at the last week of October, I'll be leaving town for a few days. I'll let you know about that as I go. I typically, for my paid subscribers, miss nothing. But for the freebies, I'm gone. Okay. So let's talk about the markets. The market has suddenly taken on fear about inflation. Oil is what brought that fear on. We keep hearing every day, we backed off a little, but we were $85 in Brent. We were $82 in crude, WTI. And energy prices and energies and the other parts running to the upside. It's all good stuff, right? To a degree. It's good stuff until it isn't good stuff, which means it's like a tax on everybody. What is the solution for the tax? Tick-tock. High prices. You got it. High prices are the solution for high prices because you bring on the entrepreneurs. That's what American business is all about. Who's coming on board? If you get my full research letter tonight, I'll show you in our trading kit. When you get that, or if you want to sign up for a sample of my newsletter, it's there. And I write about this. The independents are coming marching in big ways. $80 crude oil, $75 crude oil, 70 wakens these guys. They aren't the big boys. They're not publicly traded companies. They don't have to give two hoots about paying you a dividend. They're private. And guess what? They're well-heeled. And guess what? It doesn't take a genius to go to a bank with $80 crude oil and show them what you already own in the wells and say, I need the money for the drilling, and you'll be the first guy to get the money back. Duh. Let me think about that. I'm the banker. How hard is this? You know, this stuff isn't the stuff that you make up. And that's what's going on. Green is great. But not green at this expense in terms of we're going green. Canada's going green. Europe's going green. Not China, of course. Not Russia. And certainly not OPEC members. God forbid they're going to sell us that oil at $80. So we've gone green, but we're going to pay them to stay non-green. And you'd want to tell me the net of that is okay. Don't buy it. Not in the wildest dream. This isn't well thought out. Al Gore was right. Years ago, we should have begun this. He was the one person I didn't think was right. I was the opposite side. I apologize. He was right at the end of the day. All right. So let's go with S&P 500 index. Here's the market coming down, staying under that 18-day average for a change. Now, back here, when we got under, we popped right back. So this is a subtle shift that is taking place in the market. October is a funny month for stock indices. Back in 1987, we had the great Black Monday. I remember it because I owned at that time my own commodity firm and a stock firm. And the only reason I'm still here talking to you is my offices were on the first floor. Had I jumped out the window, all I'd have done is stumbled onto the sidewalk. It was that terrible. Remember, as the owner of these companies, I am responsible. I'm the first line of defense on debits. The client's supposed to be, but inevitably, I just don't have the money. All my money just got wiped out. You know how that works. Danger, danger, danger. Well, that's not lost. It's now 30 years later, and the market hasn't forgot about that. So it stays volatile. But as you get through this, we'll see what happens. September's generally a down month in stock indices, very volatile in October, and then I get ready for the Santa Claus events, if they're going to show up. So, in looking at a bar chart, okay, the pattern is still bullish. I got higher lows, higher highs. The market's pulling back into support at the 100-day moving average of closes and the 18, but it's fighting there. It's no longer going up easy, and I don't think it's attracting new buyers just yet. Why? I'm going to carry you back here. This is the market on Friday, and obviously we were doing the weekly charts. If you buy here at 43.79, if just putting a stop under the most recent low is the most brazen of all stops, regardless of money, not the wrong thing to do, but regardless of money always is. There's no money management there. Well, your stop's under 42.69. I believe that the algorithms, the smart money traders, build in dollar risk in some manner into their system and say, no, if it trades over that risk, regardless of all the other factors, we don't do anything with it. And that causes the market to back off in its own ways. This is what I think went on today, is you're back to the 100-day and you're sort of playing there. Now, I'm looking for this to all tighten up. If it just wants to break, c'est la vie. It doesn't matter. The market's under the 18-day average. The swing line's up. That's not a buy signal anyways. The dollar risk is too big. And I think the market's going to want to pull in the Bollinger Bands and get support and resistance tighter to the market, centering in on these moving averages. Could I be wrong? I could be very wrong, but that's what I think. Momentum had been up. It's not pointing down. It's sort of drifting. I see nothing on that chart. NASDAQ is similar in this sense. It doesn't want to start an uptrend, whereas you did in the S&P, but it's refusing to get over the 18-day average of closes. That continues to act as its resistance point. If you can't see it, go to an eye doctor. It's right there. You have a lower low, a higher high. You're drifting sideways in the middle of nothing. Take out 1,500, 01 and a quarter. You would change the pattern to higher lows, higher highs, over 14,901 at that point. I'm not saying that will happen. That would be one of the ways to get the chart bullish. What could get the chart bearish? Absolutely nothing. You still have the flip-flop. You have a higher high, lower low. There's just nothing to do there. The Dow flipped today. Now you've got a pattern on the chart. You had higher lows, but now you got lower highs. So I'm going to change these arrows. They're going to be lower highs, lower low, making a run for the 18-day average of closes. When we look at the Russell, you still have the pattern of higher lows, higher highs. I warned you that when the market was down over here, that this market's got a lot of key moving averages. It's going to have a big problem if it tries to rally. It tried to rally, made a run, didn't quite get to the upper band, and now it's pulling back right within those averages. And this is what I really think's happened. You're going sideways, void of wanting to do anything. Trend up, bias down, momentum down. In the VIX, you fell back again to major support at the 100-day average of closes. Where do I think it's going? Well, my guess is back to the 18-day average to figure out what to do. First resistance, 200-day average. Next up here. But not ready to make a move that I see one way or the other in a big manner. In the bond market, still very much in the bear camp. First, you have converted the momentum indicator called a slow stochastic. I have no idea what stochastic means. Never did. Talked to George Lane, the developer. He tried to explain it to me. I didn't buy what he was saying either. I think it's a made-up word. But in any case, the momentum indicator, what I love about it is it has a personality. And at first, in my early years of working with it, I didn't get any of that. I just followed George. Whatever he taught me, that was the gospel. Then I kept seeing patterns that would develop where the market would develop sideways numbers, get under his 20 oversold area, and stay there. And I asked myself, if the market's staying oversold and it keeps breaking, is there a way to take advantage of that? And I developed the word embedded. That's all. I could have said locked in. I called it embedded. That is in the dictionary. So lower highs, lower lows, embedded. It means to me that the pros are going to keep selling the rallies until the red line closes over 21. What else is going on the chart? Let me take you back to Friday, because we didn't do one of these for the daily charts. Do you notice that the 18 in red is over the 100, and these are moving average of closes? What? You got under it? Or did you? They both went to the same number on the close of business today, Monday's close. Now remember, tonight we're already in Tuesday trade. Oh my gosh, you got it underneath. It's called a bearish crossover. And generally when that happens, you make lower lows. We'll see if I'm right and the market does that. 10-year note, you had your crossover back here. If you don't pay attention to these, that's up to you. I pay great attention to them, and I bring them to your attention here. And when that happens, it is a sign that people that are working with moving averages, one of the most popular of all technical studies, because it's simple to understand. That's what they're working with. And when that happens, I look for lower lows. Otherwise, it's a false crossover. Well, it worked. There you go. And it's embedding. This thing's getting more bearish. So I know your broker's probably saying, oh, no. And I'm saying to you, I think the rallies here are still going to be sold. I think traders are looking at long term, that this was all a top, past tense, right in front of you this summer. And you're not going to break that in one way or the other unless you get another case of COVID, something happens to create economic catastrophe in some manner. Barring those type of events, I think the norm is interest rates are going higher now. Dollar index, does it not pay attention to higher interest rates? How could it not? Yet, if we go back on this chart, this is the action on Thursday. This is Friday, outside day down. I teach, and I love teaching, that if you take out the high of an outside day down within 2 trading sessions on a daily chart, the market has a tendency. I wish I could tell you it happens all the time. If it did, you wouldn't have me here. But I'll tell you the percentage plays. The percentage plays, if you take that out, you're going to make a run at the closest main moving average above the market or the Bollinger Band. All the main moving averages are here, here, and here. That's the upper Bollinger Band, and you took it out today. We'll see if it wants to run there. Where would I be wrong in that? Because whatever you come up and you have a plan A, you got to have an exit plan B. I'm wrong if you took out now the low of that day on Friday. In the eurocurrency, you have an embedded reading. I am bearish this, right? It's knocking you out from time to time unless you just stay with the embedded reading, because the pattern is higher lows, higher highs. That's knocking you out. This rules the day. All of your indicators, when you create them, there should be a hierarchy in some manner to them and a checklist. And on the checklist, you decide, it's having 6 out of 7 items good, or all 7 have to be in there. And then within the 7, what's the hierarchy? So you don't care any longer if you get an uptrend on a swing line, because this rules the day. You decide that. I teach you how to do that in my charting course. British pound. Reading a lot of articles today in Bloomberg about the Bank of England and thoughts on the process. Are they going to raise interest rates? Will that hurt their economy? Because while there's that inflation pressure, their whole economy is teetering right here. We've seen that with the lorry drivers and other parts, the COVID situations. You're fighting a big battle at that 18-day average, looking for the answer to that question. I'll let the laureates decide if they know. I'll watch the charts. Bitcoin. How could I not be bullish? People will say, well, you weren't bullish there, and they're dead right. I wasn't bullish there. The market was going down. Why am I bullish here? Because the market's going up. It's such a simple thing. Give me the embedded reading, make the market lock in on an upper Bollinger Band, and until the red line closes under 80, I'm going to be bullish. I know it's too simple for you, but that's the beauty of most systems. KISS. Got to put money management, other things maybe in there. I won't teach you everything here. I do that for my paid subscribers. Brent versus WTI crude. We talked last week that maybe $4 was too much, and the market making a run. It didn't quite get back here. The weekly chart looks a little weaker than this. But when you look at Brent, what is this called? Is that not called an embedded reading? What do I tell traders to do when that occurs? I'm having them buy on these breaks. Where? Take my subscriber video, because I've done that. What about WTI? Same thing. Am I bullish or bearish? I am bullish. Am I telling traders to lift some positions against upper Bollinger Bands? You betcha. And what am I telling them to do on the breaks? As long as you don't get that red line closing under 79, you betcha. And then we get to heating oil. I blew this trade. I'm telling you, I don't know what I saw on a chart. I had the traders come in and I had them come out. I don't even want to look at it. I'm so embarrassed about it. In November, nat gas, I've been waiting for this. So the downtrend has finally come in, and the Johnny-come-latelys and everybody that bought up there are wiped out now. Yes, wiped out, because all the news up there was just super bullish. Now we're down. Let the market restructure. What's the number that I teach you the markets normally go back to when they hit Bollinger Bands? Go look. The 18-day average of closes. Now you rub your hands together and you're ready to get going, and that's the key. So you keep hearing me tell you about all this. To get our trading kit that's got our charting software, all the booklets we have, a couple of courses that are free in there for you. Well, that's the beauty of it. But while you're doing that, because it's going to go to our webpage and it's got free offers on it, click on if you want to get my research. You can do that right through here. But I want to teach you about the charting patterns. I want to teach you about money supply, M1, M2, M3. You better learn this, because for a decade, nobody paid attention to it. And when inflation comes back, you start paying attention to it, because the Fed takes out its toolbox, takes it out, it dusts it off, and it says, guess what, folks? It's time to change, and we're going to be using our friend of quarter-point hikes eventually down the road and other tools that are in that chest for us. That's what you get. So go to the website, enjoy it. Free charting course is within this, a couple of them, and I'll talk to you later. I'm Ira Epstein.